Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring the daily recap. So we had another interesting session where the S&P made another new all-time high, but I talked to traders out on the trading floor, and everyone's still extremely frustrated. And I had a trader come up to me today and ask me, I've been trading the same way I've been trading for most of this bull market. I'm focusing on the long side. The market's back at new highs, but my P&L is not reflecting the fact that the market's back at new highs, despite the fact that I've been trading long positions. And the explanation for that is that the stocks that momentum traders, short-term traders generally focus on aren't the stocks that have been leading the market higher consistently. And yesterday, we talked about how tech woke up, and you saw some rotation back into some trends that we might have expected based on some of the macro stuff that's going on right now with the Fed tapering QE and all that type of stuff. But generally speaking, you just have to follow the price action and make sure there's commitment to rotation rather than just one-day aberrations on the charts, which tech was able to bounce in the afternoon, but you didn't see a lot of commitment to the upside after some morning strength, both pre-market and the early morning session. But we'll take a look at a few charts to dive deeper into what I'm talking about. If you take a look at the chart of the S&P here, you can see another all-time closing high, nothing in the way of resistance, given the fact that we're at all-time highs. You talk about support, which we mentioned this morning is now the prior resistance level, which is 1875 on the S&P. So that's the level that traders will be watching. Hopefully, traders will be looking for some sort of sideways consolidation above that 1875 level for another potential blast off, and hopefully they can get participation from small cap stocks, from tech stocks, which are the stocks they like to see lead. But overall right now, we're just seeing a continuation of sectors that aren't on momentum traders' tip of their tongues. Those are the ones that are leading the market, and it's causing a lot of frustration right now. Take a look at the Qs. Like I said, we were able to bounce into the close. I had written up my notes for this daily recap, and basically my notes were consisting of the fact that we were strong in the morning, then faded in the afternoon, but then we got that ramp around 3:30 that took us higher into the close and led to a decent close where all the indices were higher. But overall, still, when the narrative shifts every couple hours about market action, that tells you there's not a whole lot of commitment to either direction. And the Qs, as you can see, opened up pretty strongly this morning after showing relative strength yesterday. So you thought that might continue, but instead you got a washout for most of the day. The Qs were actually weaker earlier than the S&Ps were. They were able to close off of their lows to finish with gains of about 0.2, 0.3%. But overall, not the most convincing action you've ever seen. But at least the Qs are still back above their 8 and 21-day moving average. And I'll just run through some of those tech names just to get a look individually at how they acted. Apple, sort of similar to the Qs, is that this is obviously not a bearish candlestick today, but after waking up yesterday following 4 down days, I think traders were hoping for a little bit more today. And instead, it looked like Apple was going to close negative until that late afternoon push that led to basically just like a very quiet doji candlestick. And Apple has this wedge pattern that it's trying to break out of, but overall, Apple's sort of moving into that group of stocks that's a slow-moving tech dinosaur. They're raising their dividend, they're doing all these share buybacks, but growth is slowing in the company, and they haven't come out with any of those new products that everybody's been waiting for. So it's almost becoming dead money from a momentum trading perspective. Long term, I think there is some value in there, but for momentum traders that continue to focus on it, I would definitely give you the advice to look elsewhere. And we'll run through a couple other names in tech that are notable. Google, another one that was strong early, opened higher, but then was weak for most of the session. And if we looked at intraday charts of these stocks, you can see, I'll give you like a 15-minute look at Google today, for example. The afternoon bounce, or the late afternoon bounce, definitely concealed some of the choppy, frustrating type action that we saw in a lot of these stocks today. As you can see, in the last hour or so of the session, Google was able to bounce, came off a little bit into the close, but going back to the daily chart, same story, a little bit of frustration. And a bearish point of view might have you looking at this chart right now and saying a really strong down move in Google, one of the strongest down moves that we've seen in months, really, for Google. And then it's sort of got a little rising, maybe call it a bear flag here. You hate to do that in a stock like Google that is so strong on so many time frames, but you just got to use this flag to potentially measure your entries. And if it breaks below this rising trend line here, I'll get my line tool out. If it breaks below this rising little flag here, maybe you see Google continue to come in. If we can continue to see the type of rotation that we saw at the end of the first quarter out of tech into energy, utilities, industrials, transports, things like that, maybe you see a little bit more air come out of tech, which had a really strong run. Take a look at Amazon. Amazon even had some news today. It came out with the Amazon Fire TV, which is basically an Apple TV type thing where they are claiming that the specs are better, it's faster, less buffering, going to be better selection. So they're trying to rival Apple in that regard, but it didn't really do much to move the needle for Amazon as its chart was very similar to a lot of other charts we saw in tech today. And you could say the same thing about Amazon that I said about Google, is that you see a little bit of a flag forming here, whereas yesterday it looked like it might want to get and break above this little lower level consolidation. Now it's right at its 200-day moving average. If it breaks down out of this little flag, bear flag, below its 200-day moving average, that would be a big-time complexion change. And this is a major support level here, a pretty significant support level here for Amazon. If it breaks below that, major support, I guess you could call it major, sort of somewhat major support, isn't down until you get around the 310 area. So definitely something to keep an eye on there about whether or not these break higher or lower out of these little lower level ranges that we're seeing. And take a look at Netflix. Netflix, a little bit different type of pattern. This is another one that's been weighed upon by all the competition that's coming through. You see, the Amazon set-top box did include Netflix as one of the apps that you can get on there, but Amazon has its own streaming service that I'm sure they'll try to make very prominent in that new set-top box. And they announced a new free streaming service that's going to be ad-based. Apple announced their own, news came out that Apple's working on a streaming service with Comcast. So a lot of jitters right now, I think, with people that own Netflix, and it's not able to sustain any sort of bounce. Strong in the morning, but faded for a little bit of a doji type candlestick. One stock in tech that did not suffer that fate and was strong today was Tesla. While most of these other tech stocks were strong in the morning, faded in the late morning and early afternoon, and then rallied and finished somewhere near the flat line, Tesla held in pretty well during that market weakness in the late morning, early afternoon, and then finished strong to get back above its 8 and 21-day moving averages. It looks like it might want to break this descending channel that's been in place since about late February. So this one looks like it's separating itself a little bit within tech, and a name that I would look to for some relative strength. It still has a high short interest, so it's ripe for a squeeze, and really constructive to see it close on highs today and put in 2 nice days of price action. Jumping into social, you saw in the social media stocks similar patterns that we saw in some of those high beta tech stocks. Maybe Facebook a little bit stronger, as yesterday had a more impressive move out of its lower level base. Today did give back some of those early gains, but overall finished around flat, back above its 21-day, I believe that is. No, I believe that's the 8-day actually. But in general, Facebook a little stronger than those tech names, but also feels like there's a little bit of momentum coming out. And then the rest of the group, Facebook is the clear standout in the social media stocks, and the rest of the group is really not looking very healthy right now. You look at Twitter, for example, really weak today, engulfing yesterday's move and closing below yesterday's low. Looks like it might want to get back down and retest this pivot down here around 43.31. So I want to keep an eye on there. Another one that looks like a better short than it is a long right now. LinkedIn just has been weak for a long time now, but continued to be so today. Bearish engulfing bar. Looks like it wants to challenge potentially this pivot low here around 180. Has been mired in a very clear descending channel. Descending channels are bearish until they break to the upside, and it doesn't look like LinkedIn really has much of an intention to break to the upside of that descending channel. So right now this continues to be a bearish looking chart. And then Yelp, just to point out some ugly looking charts today. Yelp, another bearish engulfing bar. Big wide range red bar today showing relative weakness. So the pivot it's challenging here is 74.25. If it breaks that, not too much support. I mean, I guess you could talk about this $70 area as being a key level, but then beyond that, the 200-day moving average around 65 is the next level that pops out at me. And then just some Chinese internet stocks, just staying in tech, got hit hard today. Nothing much to say about them except they were really weak. Qihoo is an example, YY, Dang, Sohu, just something to take note of. These have been weak over the last several weeks, and looks like that is going to continue to be the case. This morning I talked about the solar stocks in the morning call, and our philosophy here, as we often talk about, is we like to trade leaders. Sometimes it's more attractive to look at laggard type stocks and think that they have a little bit more room on their chart or something like that, but in general we feel that you get the most consistent results looking for the best acting stock in the best groups and looking to play that on buying it high, selling it higher, rather than looking to buy at lower levels and sell higher, which I don't think has as high a percentage of success. And that happened today with the solars. You see FSLR, we talked about how that one has clearly emerged as the strongest one in the group and was the strongest one today, still above its 8-day moving average, sort of forming a little bit of an upper level base here after that really big igniting move. But then you saw some other names. Solar City, not very impressive at all. Opened higher, but then came back down, finished negative, showed some relative weakness. CSIQ, another one of the ones in the group that I like, was just lethargic today. Definitely not extreme relative strength, not relative weakness. There was no relative weakness at all today from CSIQ, but just not a lot of life in the same way you saw it from FSLR. And then just looking at some other names in the group. SPWR showed a little bit of strength. TSL, quiet. And the point I'm trying to get at is FSLR right now clearly to me seems to be the best one in the group. Maybe there will be a pattern that emerges in a name like SCTY in the future, but right now I think if you're focusing on the solars, FSLR is the best one to be focusing on. Within biotech, you're seeing some interesting action. IBB also opened higher today. Looked like it might want to build on the last 2 days of strength, but instead reversed and finished around the flat line. And just a few names that have been on people's radars within the group. Gilead has had a really strong 2-day snapback, but today looked a little bit tired after some, like I said, big gains in the last 2 days. Might need a little bit of rest before it accelerates out of this descending channel that it created. Celgene, another one that has a descending channel that it's looking to break out of, but put in a little bit of a doji. This 200-day moving average, see whether or not this serves as any sort of resistance or whether or not it can really extend back above that 200-day moving average. BIIB, a little bit stronger than those other ones. It hasn't flirted with this 200-day moving average the way something like Celgene did. So this is one that's showing a little bit of relative strength, but also just a little bit lethargic. A lot of tails you see in BIIB on the chart, which isn't exactly what traders like to see if they're looking to swing trade. And also when you see action like we saw today, early in the morning, when you see these really speculative type stocks, the ones that are really dominating traders' radar screens and dominating trending on StockTwits and everything like that, it's a sign that there's people are getting a little bit overzealous with speculation, and there's not a flight to quality tech stocks, for example, that you want to see lead markets. And those names that I'm talking about, the fuel cell stocks, Plug. There was some news that came out on BLDP, and I'll look at that one next, but these were strong in the morning based on some reports that there was some new contracts out there. But a really big red flag to me with stocks like this is that they're really speculative stocks. It's a story that's definitely a few years out, but you see these news stories that turn out to be frivolous that come out and sort of pump the stock higher. That's what we saw here. The CEO came out, talked about all these big new contracts that Plug had signed. The next day it turns out that was a little bit of a flimsy claim. And then today there was news from BLDP that they had signed some contract in Scotland for buses in Scotland or something like that. And it turns out that news was about a year old. So you have people that seem to have an interest in pushing these things higher, trying to manufacture news stories and stuff to drive the stock higher. And that's just a concerning sign to me that this is not a story that's built on factual evidence and earnings growth and sound financials right now. It's one that's built on sort of some lowbrow type of mechanics that occur in the stock market. Doesn't mean that you can't trade them for a scalp, but you always have to be careful when you're trading these names because they can be dangerous. You can get those quick pull-ins like we saw today. It is important to keep abreast of news and things like that. And that's one thing the virtual trading floor does do, is that you have guys on there who are very in tune with news and stuff like that, and definitely bring it to you very quickly. Display stocks, I put that into its own little sector because there's two symbols there that I wanted to talk about. GLW, not to do a victory lap here, but this is one that I've continued to talk about on T3 Live, starting back around the $13 area, which is when I personally got involved with it. That's back from May. I said that to some people on the virtual trading floor, and they were aghast that I had been holding a stock since May. God forbid you hold a stock for almost a year, but sometimes when that happens, you get a really nice dividend yield. I locked in a more than 3% dividend yield back when I bought the stock around $13. Continued to hold it, and got really nice price appreciation up around 65% since then, and just extreme relative strength over the past 2 weeks here in GLW, and a really nice day today, just shrugging off any of that lackluster market that hit in the late morning, early afternoon, and just pushing the highs. It is a little bit extended right now. I definitely wouldn't buy it in the short term right here. Maybe with a little bit of sideways action, a retest of those short-term moving averages, I think Corning, you can still buy it higher. And then GTAT, I've talked about how GTAT is a more speculative name in the group. GTAT with their sapphire displays that are, it's the camera lens on your iPhone, and also the fingerprint ID sensor on your new iPhones, iPhone 5, which I don't have yet. But that's made of sapphire displays, and Apple's given a big investment into GTAT, and they got positive comments this morning from Goldman Sachs, which triggered the rally that you saw. Some people might lump this in with the speculative group, like the fuel cells and the KNDIs that were strong this morning, but I think the GTAT story is a little bit more compelling, especially when you have someone like Apple who has made a bona fide investment in the company and has an interest in seeing GTAT succeed. Did close a little bit off its highs, which is a little bit, I wouldn't say concerning, but not exactly what you'd like to see. It's a little bit too rich for my blood in terms of the valuation multiple and things like that. But as a pairs trade, it's not a pairs trade, a long-short pairs trade, but you're sort of hedging yourself a little bit if you own GLW Corning from the threat of something like sapphire displays coming in and eating a little bit of your lunch. So if I could get a big pullback, a bigger pullback on GTAT, I'd love to own it as well, along with my Corning. But maybe this was a good opportunity down here around the $15 area, but I would like a little bit more of a pullback. I don't think their earnings is necessarily going to match expectations. What do I know about that? But I think the story is a little bit more compelling right now than I think their financial results are, and hopefully that gives an opportunity to buy a dip in the future in GTAT. Good action there. The precious metals, strong today. Gold bounced a little bit. Miners bounced. Not a lot of action during the session. Most of it came overnight, but interesting to note there. They're trying to break out of those steep descending channels. And like I talked about, the sectors that are really pushing the market higher right now are not the sectors that traders generally focus on. So it's creating a lot of confusion for traders that are saying market's on highs, my P&L is not on highs, it's not moving the way I think it should. And you look at something like the XLE, energy stocks come on our radar every once in a while on things like off the charts, but for momentum traders, it's not necessarily what they have on the front of their watch list. But really nice extension today in XLE. And within that, Occidental Petroleum for the second straight day had really strong volume on call options. So you see unusual call buying. It can mean any number of things, but sometimes it means that somebody's taking a very bold directional bet in a stock. And today's price action would seem to support that. Really good flow on those calls in OXY today, and a really big engulfing bar that engulfed almost 2 days of price action, and that helped contribute a lot. It's maybe the fifth or sixth largest component in the XLE. And then PXD also had a big day. Pioneer, natural resources, big igniting bar, not really any resistance until you get back up into the 205 area. So this one looks like it could have some room on its chart as well. And we just have to monitor those trends to see if energy continues to lead and money continues to rotate into sectors like energy, and that continues to be the trend. And rather than tech, you see those sectors perform better. And then also retail stocks are very strong today. You look at the XRT, apparel stocks in particular, and you look at the XRT ETF, really 4 impressive days here, especially the last 2 days. Wide range green bars closing on the highs, now well above its 8 and 21 day moving average. The pivot obviously to watch here is 87.53. You get above there, could get to 88 and change to these previous highs. And then who knows, could be set for a breakout. But a few of the names that were strong there today within the apparel group, A&F, really nice igniting bar to get back above its 200-day, a little bit of a laggard stock but acting better. Lulu, same thing, a little bit of a laggard stock but acting better. Now it's into this gap. I think it's a strong brand. I think they obviously got a lot of bad press from those CEO comments and things like that, but one that I think is looking a lot better. And then even Gap. I mean, I haven't shopped at Gap in years, but I guess some people still are. Bounced off his 200-day moving average, and really nice move today. So just interesting rotation that's going on. And then also Dow theory, some people are looking at that. Transports and industrial stocks acting well at the same time, which Dow theory tells you that's what you like to see, is those two breaking out and leading the market at the same time. New high for IYT today, new high for XLI. Dow theory, just one of many theories and formulas that people have for the market, but just something interesting to take note of is sometimes these things are self-fulfilling prophecies. If there's enough people that believe in Dow theory, maybe it can be another thing that helps push the market higher. But overall, that's about it. Just the market making new highs doesn't really mesh with the mood that I'm seeing on the trading floor and among traders right now, and that's because rotation has been a little bit unexpected and peculiar. The names that people were hoping for and are used to getting some upside follow-through on, the bellwethers of high beta tech and financials and things like that, those are not the things that are moving well right now. It's energy stocks, it's utility stocks, even though they've pulled off a little bit, industrials, transports, and just very individualized price action on a day-to-day basis. One other thing I want to touch on is I tweeted a little bit about it after the close yesterday, but the recent discussion about HFT, I just wanted to weigh in on that a little bit because if you're involved in the market, you've probably gotten calls from family members and stuff who watched 60 Minutes and said, wow, I just saw this thing about this thing called HFT and the market's rigged and this and that. Should I even be invested in the stock market because of this HFT? And I think Michael Lewis, I respect him very much as an author. He's written some great illuminating books. But I think the discussion that he's started, it's good to start the discussion about HFT because I think there's plenty of things wrong with it. But the idea that the market's rigged, that somehow long-term investors and mom-and-pop retail investors are harmed by HFTs front-running their orders is preposterous and irresponsible in my opinion. And the people who really suffer most from HFT are day traders, and most people would tell you that day traders aren't necessarily the people that are adding the most value to the world, that need protecting and need preserving. Those are the people that really suffer from the pennies that and micro pennies that HFT really skim off the top. Like I said, there's a lot of ills about HFT. It leads to a very broken market structure, and there's plenty of things that we need to do to fix market structure to prevent things like flash crashes and all those other issues that plague, like I said, market structure right now. But the idea that HFT is somehow creating an environment for long-term investors that is cheating them and not allowing them to get the best prices on their orders that they plug into E-Trade or something like that, I think that is completely off base, and it's just evidence that Michael Lewis, he's not entirely educated about this topic as well as I think he should have been. Some people got his ear. The people over at IEX sort of have used this as a platform to promote their exchange, when a lot of the exchanges aren't the ones that are completely at fault here. I think regulators in general have not done a good enough job of crafting rules in the right way to promote healthy HFT rather than allow predatory HFT, which is the real cancer that plagues the market right now. And there are ways to combat it. We've talked about it on T3 Live before. Sean Hendelman of T3 Companies has been on CNBC, and he was attacked in a similar way. We've seen people recently. But in general, the discussion is not centered on what it should be right now regarding HFT and rigged markets and things like that. I think the idea that markets are rigged is just absolutely wrong, and like I said, I think the discussion is taking place in the wrong areas because of some flawed writing and reporting by Michael Lewis. But that's just my 2 cents on that. Wanted to weigh in on it. Some of you might find it interesting. Some of you might say, shut up and just give me some stocks that you think are going higher and go home. But anyways, those are my 2 cents. This has been John Darsie here for your daily recap. I'll be back here with Brittany tomorrow morning for the morning call.